Traders, what's up? Welcome. Jamie Saettele here, SB Trade Desk, midweek strategy webinar. It is Thursday, so it's a little more of like a late week strategy webinar, but kind of glad we waited till today because we are now getting a response at the level in DXY that we were kind of waiting on to give us guidance. So first of all, can you hear me? Can you see the chart? Yes, says Trevor. Super duper Pooja. What's going on? Okay, so last night's note's probably pretty explanatory as far as what I think the deal is. A, B, 1, 2, 3, 4, 5, C. So let's not worry about the aftermath of what this means, but let's worry about the now. And if we, or this interpretation, first of all, if you didn't have any knowledge of if you just knew trend lines, right? This trend line, which was support for so long, it was broken on a gap, nonetheless. And then for a while, it looked like we had this consolidation that wasn't going to get there. Because initially we were thinking we'd go retest it. Of course, the market had to be difficult and wait for like 3 weeks before going to test it. It finally has tested it today. And the manner in which it's gotten there, to me, is exciting because I'll explain, but is exciting. So let's zoom in, okay? Go 60-minute chart. Okay, so you've got A, B, everything's overlapping, right? So this explains a lot in terms of why the market's been so slow, right? Everything's been corrective. That's why the market's been so slow. I thought that in the beginning of the year we were going to have this huge dollar top, and we have had a dollar top, but it hasn't really been, it hasn't been widespread. I mean, things have kind of been on their own, doing their own things, right? We looked at the different euro against, commodity currency indices. I mean, commodity currency has been beat up lately. The yen's been beat up, right? Dollar yen higher. Euro's kind of been higher, but not like substantially higher. The pound's done pretty well for the most part, but a lot of that is a couple hours on April 18th, to be quite honest with you. And we're still at the same level, right? That's the 28.43 level we closed at. Today's low is 28.47. So let's look at the intricacies of this decline. So 1, 2, 3. And the reason I'm calling this a 4, it's like textbook, really. You have a 5-wave rally from the low, right? You got this 1, 2, 3, consolidation 4, thrust higher 5. So some may look at this and say, well, it's a new low and you're going to dip and then go higher. I think it probably completes actually consolidation from here because everything from here is corrective. So when you have a 5, but if right before it you have a 3, like we do here, this is clearly a 3, A, B, C. There's really no other way to count that, right? 5 down here. You can look at an hourly closes, right? 1, 2, 3, 4, 5, correction, and then drop. This is clearly 3, A, B, C, okay? This is probably something like an A triangle, B, C. So however you slice it, however you dice it, you've got a correction. 3, 3, 5 is the sublabels. And, slope-wise, yes, Leon says, "Do you see new lows for DXY before the possible stinger move?" Yes, that's the point. So that's what I was saying before. So like not worrying about what um what's going to happen after this. I do think we head lower from here, and this is where this is where the slope lines really can help us. I think is if we do have it drawn off of this high, the January high, but the look at the 25 line, which was essentially resistance today, right? Just as the 75 line was support, that 75 line probably provides support again, right? Because it intersects with all this stuff down here, all these levels. So all the levels that we were looking at in last night's post, all the levels that we were looking at last night's post, the two legs down, which is probably the most important one, the equalities between waves A and C, but also the high from July. All that stuff comes into play, kind of towards, I mean, really, if you want to be nitty gritty about it, you'd say it all comes into play. The big ones like between May 18th and May 23rd. Okay. But what's important is that I think we've come into resist, and this was one reason why, even after, like last night when I saw the news about the Canadian banking system, I think it was Moody's that downgraded the Canadian banks or whatever. I mean, come on, Captain Obvious, like really. And then the Kiwi breaking down hard on RB and Z. I'm not saying those two things CAD and Kiwi can't weaken, but it seemed like a bad bet as far a bad trade, like especially with the general dollar, with the dollar index coming into this resistance, okay, and seeing risk of a reversal. Just didn't seem like a good calculated play. So let's talk about ways to play this. All right. So this is DXY. Okay, it's a pretty clean looking chart, right? And we have it at resistance. So step one, resistance DXY. Step two, how to trade it. Here are the weightings for DXY. All right, this is from the ICE website, Intercontinental Exchange that manages DXY. Euro's number one, as we all know, 57%, almost 58. So it's basically the Euro index inverse. Yen's actually number two at 14%, then pound at 12%. Then the Canadian dollar at actually 9%. A lot of people forget that the Canadian dollar is that high. So, all intents and purposes, it is a Euro index, okay, being 58%. But you got the yen, the pound, and the Canadian dollar in there too. All right. Swedish krona is 4, Swiss franc is 4. I'm not Swiss franc. Go to hell. I don't care about Swiss franc. All right. So let's look at euro. You already know where I'm going with this. Euro is you're looking for that 108.29 level today. Didn't quite get it, but I'm willing to look at buying it after the day is done here. So with euro, I guess you could be open to a Friday low on the median line, but essentially I think we are maybe going to make that run for the long-term median line now from here, okay, before we roll over and potentially get something nasty on the downside. So that is my thought process with the euro. Again, I don't want to think too much about what I would do up here. I just want to think about what I'm doing now, right? Which is right here. So this is you're into the general area of support. You have to like how the market's acting down here. It would have been better. Again, I would have liked it better if we would have touched the 108.28 in the median line, but if we look at it from, let's go to the 240. If we look at it on the 240 chart, right, if I take the trend line here, the slope of it, look, if I say put it over this high down here, I mean, if you're just one of those people that likes to see the market touch a level, a line, maybe before you get involved, and okay, fine, then put one over this high, the 216 high. So I don't think there's anything wrong with saying that we've come into support and held it on euro. Okay, 20-day average is again just a little bit lower. This also means, of course, that if you're going to be buying euro, probably want to give a little bit of room on the stop. Now, here's how I'm going to do it, and this is what I'll write later in the update, but this is what I will be looking to do. So first of all, you do have divergence on the hourly down here. It's a good sign. All right. This is the hourly close level, 108.51. That area is an area where I'd be willing to leave orders, right? We've talked about this before and done this before with success, actually. When you have a 24-hour close, right? You think you got a low in place. A lot of times you'll go back. It's not uncommon to see the market go back and test that closing low, right? Whether it's a stop run or whatever, especially going into a Friday, right? We all know how Fridays can get a Friday low. It's not like you have big expirations or anything tomorrow. But Friday, there are always expirations on a Friday, but it's not like one of the really big Fridays, right? So we've come into support. We've taken out these lows. That's a good sign. Turned up. I'm looking higher in euro. Wanting to buy it probably 108.55, right? Give it a little bit of room plus spread. Okay, fair enough. Then when it comes to the managing of the trade, so remember this guy, remember this fork, the short-term one here, okay, upsloping short-term one. Get rid of the averages, clean it up. All right, the short-term fork here, which I will put in a different color so you can really see it, we'll put it in blue. All right, short-term bullish fork, which was support on the way up. Okay, that is probably going to be an initial resistance area for the move. That's what I will be paying attention to for initial resistance on the up move, and it's a good deal higher, right? You've got the square root level 109.78, you can see right up there. So I'd be looking up into that level. Yes, 109.78 would be the first area of resistance to pay attention to in euro. All right, so there's euro. So pretty set and clear, I think, on euro. Want to be buying it probably 108.55. I'll wait to see how the day finishes. Whatever. Don't want to. I would never really like making a trading decision between the end of London and the end of the day US, unless there's like FOMC or something. You get some stupid moves sometimes, or a lot of times the market does nothing. So no need to force it here. All right. So there's euro. What about cable? So cable, this was yesterday's chart. We have come into the support line we were looking at. I guess my issue, if there is one, is that we're still, we have filled this gap, and so, and you got the really long-term parallel of it, into it. So you're kind of like buying it. If you're buying it right here, you're buying it under a level. That's all right. To me, the better setup here would be if we ended up First of all, you do have to like how that held. Okay, that's the parallel we had last night. And again, the 2843 level basically holding, which is the high volume level from the 418 close. But the better setup, long setup, would be for me if you got, say this ended up as a triangle. A, B, C, little rally D, little pullback E, and then, off to the races we go for another, 300 or so pips or whatever, right? That would be the best setup. So I like cable here because it is support, okay, and you are in an uptrend. And I think we're still going to 135 as I've talked about for a while in the long-term page. But I like euro more in the immediate term. And why don't we look at, instead of going right through the majors, I want to take a look at euro pound really quickly. Because euro pound might give us a clue here on what could be better. And it's actually, euro pound's fairly clean right here. Okay, so you have broken this support. All right. However, and I see a lot of head and shoulders talk right out there. However, I wouldn't, get real jacked up and call this a down, a big downtrend just yet. For one, if you look at this chart, you still have horizontal support on it. Okay. How many people do you think got so excited about this so-called head and shoulders, which I'm not really sure it is anymore because the right shoulder would be a little too large to get, to be a real head and shoulders at this point. But if we look at the internals in this, let's go to an hourly chart. I mean, this is pretty clean, don't you think? Impulse up, 3 waves down. 3 waves down after a sharp rally is a pretty bullish characteristic. And look at that, the 2 legs down are exactly equal. So you have 2 legs down into 83.81. Okay, the low is 83.82. Identical as far as 2 equal legs. And if we take it a step further and say, where might we go? Well, 86 would be 2 equal legs up, which, would put you, would put you in the in the vicinity of trendline resistance. At that point, you might, think about switching from, more euro bullish, pound neutral to more, maybe euro neutral to bearish and more pound bullish. So this euro pound chart I do like a lot. And, I haven't traded a lot of the non-dollar crosses this year, but I like this as a trade, right? I like this as a trade, especially with, would love to see, as I mentioned, would love to see this morph into a triangle, this cable chart. But what if it's, what if we do leak lower? What if we get down and finally, end up testing the 127.0520 area, this lower trend line, right? We've talked about that area for a while, and we just kind of went stationary for a while. But now we are coming off the gap. So if you're going to get some pound drop, it's going to be from a level like this. So yeah, this is a good looking chart. I believe euro pound up to 86 at that point, would reassess. And that then takes me to, I want to stay on the pound stuff here. That takes me to pound yen. Pound yen finally is coming to a massive, massive level. This is the old channel from 2011, 2012, right? The old resistance line, which, as you see here, as you remember, you've seen this before if you've been around with me for a while, was the support line before Brexit, in which you got, 1,000, 1,400 point rally in 5 days. Obviously, then Brexit happened, went to the next channel line, was below it for a while, came back, tested his resistance in December, came back, didn't quite get down to the next one, which would have been a great thing. And now we're right back at it, right? So this is resistance. And then the red line I have on here is just a horizontal level. This goes back to 2013. So right, it's a big spot. So yeah, I like being bearish cable here. So let's dive in a little bit more on pound yen. So your dollar yen chart, you see dollar yen hit that support line, getting a bounce. Pound yen, pound yen, pound yen. Okay, so here's the hourly pound yen chart. So we've already looked at, we just looked at the long term. That is a daily chart, but it's still, we, went pretty deep on it, going pretty long term. So you can just see the constant divergence on the way up, and then finally a final divergence here yesterday before it finally came off. So with this, this is one thing you can't do. In a market that gets like really extended like this, you can't go and then, get really bearish just as the market gets into a short-term support region, which it has. In fact, this is the weekly opening price right here. Okay, we're trading at the weekly opening, which is 146.56. Okay, so what you want to see on this, what you want to see here is, and this is true of any market, right? But you can't really draw any sort of, you can't draw, like, what are you going to draw? A channel? Like starting way down here, this could actually come into play at a much later date, right? This could end up being a support. Anyway, you can see where I've drawn the channels. I've gone from this part here. Okay. It could be interesting at some point. But what I'm getting at is how to get into a short position on this. Okay. So this line here, let me take the square root levels and kind of get them a little bit. All right. So this line here, you can see this has been support, right? This trend line, you can see it was support here. It was support here. Ideally, the best way to do this would be to get a retest of it, right, from below. And then you've got this channel line here, which you could probably put a little higher. Okay. Same thing. This channel line was resistance on a lot of points. It was even support for some of these moves up. Finally broke. So yeah, I'm looking for us to, if we get a bounce back up towards this region, which I don't think is a crazy notion. Look at the S&P already. It was down 15. I think it's down 7.5. All right. Get a bounce back up towards this region. Your high hourly close is right here at 147.74. Okay, if we can get a bounce, something like that, again, tonight, tomorrow, Friday, whatever, it's a short. So you're essentially looking back towards the top of the range, but really you're looking into, a test of the former support lines / resistance, channel line from below. Okay, because you can't just be shorting here now unless you're willing to sit with something going against you for a couple, 100, or a couple hundred pips, because you have come into support and responded to it, right? This is support. Okay. So then you say, why don't you go long? Well, you can if you want. Okay, that's support. Your risk is right here. For me, I'm not doing that because, again, this is a daily chart, and you can see where we've traded to. We've traded to a big, huge level. So I think that, yeah, I think you're going to come off. We probably have 400. We could have 400 points on the downside here. The big horizontal level that I would look to target probably be, 47.30s range, to 42.60 range. I mean, there's a lot of pivots in there. This is a hell of a run. Okay, but it's going to need a hell of a pullback too, probably. So you can see it's really a sequence. It's really a process. We started with that daily chart. We, have a view that the market has hit some massive resistance, which it has. And in the short-term chart, it's come off from 148.10 to 146.12. It's come off 200 points. Okay, after this, kind of melt up, if you will, right? The last stage of it was really a melt up. So it's primed for a sharp decline, back towards the yearly opening price, which is right here, 144, and maybe a little lower. But in order to trade it, it's either wait until you get a clean break of this, right? A little consolidation, or hold out for a retest of the former resistance line, or former support line, providing resistance from on a touch from below. All right, that's how I will look to do this. So that should take care of, those are really the positions that I like heading into, like tonight's update. When I write, I'll be looking to buy euro, maybe buy euro pound, sell pound yen. I'm gonna look at dollar yen and dollar CAD. So let's look at dollar yen here. Okay, so dollar yen, as noted earlier, we did hit that 13.45. We'll see here. I put out that that quick note on Twitter that we had. There was this chart actually, wasn't it? Yeah. The thing you wanted to watch as far as dollar yen was concerned. Yeah, Kelly, yeah. So this is the chart, right, that we'd put out. So what we were looking at, so we came down into this. I don't know if this is going to be anything worth. This is obviously really short term, okay? That is too short term for me, something Mike would look at. But let's have, some perspective, right, on the daily chart. Remember, it's easy to get jaded by the short-term chart, and you see the market coming off and you want to get short. Well, what happens if you do that is you get short at a really bad price. And that, that is fixable. You don't have to do that. So remember, the big level, I still think the big level is 1460, 1490, even 1510. I don't, do we get there? I don't know, but here's what we're going to do. We're going to follow this, right? So here's the upper parallels. At this point, you're going higher. It's probably not going to be on the upper parallel. If you're going higher, it's probably going to be on, the 14, maybe 14, 90s or something. Okay, let me draw this on the. I want to draw this on the trading view chart so that I can draw with the little crayon thing here. All right, so here's how this is drawn, by the way. So starting down here at the low, going to this level here, and then the low that you had right before the gap. All right. and then you can see how that forms the channel, okay? And we need to make a couple parallels. So we'll do that here. And put those on the levels that were previously support, right? Those levels here, resistance, support. Okay, and then one more over the levels that were obviously resistance, right here, here, and all that. Okay, so we have basically a level that we're thinking about. 1460 is the fib, and then we have 14, call it, 114.85, 114.90, okay. All right, so this would intersect tonight, 114.90. Is there any news tonight in Japan? Not really. Actually, BOJ, Harada, not really, nothing really. Seems like everything's tomorrow, the U.S. But what you want to do from here is pay attention to this. So you came in, hit support. Okay, so far this is just a dip in an uptrend. It changes. You get the earliest part of a behavior change, right? You could say you have partly a small behavior change here when the market failed at its horizontal high rather than extending higher into this. But pull back into the support line, held it. You continue to get a bounce. Let's say we bounce. If we find support about resistance about 114.10, basically if this old support line, which is now in red, provides resistance, then you have a behavior change, okay? And you want to be short at that point. So if we come up into here and then we turn down a little bit, all right, then it's worth, plotting a short entry. Until that happens, it's, still possible that you actually get one more push, okay, and then go lower. So I believe that dollar yen's very close to turning sharply, lower. And if I, again, pull up the daily chart, I think that you're probably looking at, even a initial test of support, I think you're probably looking at something like, top side of this trend line, okay, you've got a much longer term parallel, but then the high here from 331 from March, end of March, and that's down near 1220, and that puts you down here early next week. All right, so that's where where my focus is. I guess the question is, have you already topped or you have another push? And that obviously makes a really big difference, because if you're right now you're 1390, okay, if you're targeting 1220 from here, 170 pips lower, well, you still could have, based on where our resistances were that we're looking at, you still could have another 100 pip bounce from here. All right, so it pays to kind of wait this out, rather than trying to chase every little dip that could possibly be a turn, right? Okay, so there's that. What about the Canadian dollar? What's going on with there? So we had a nice little short position going on. We were like, I had looked at it yesterday and it was at 36.50. And I was like, oh, all right, 60 pips in the money. I figured this thing's probably going to come in to, here's the chart. I figured this thing's probably going to, A, B, we're probably going to come into at least 36, which is a high volume level, and basically your old highs, 35.90s. I figure we'll probably come into at least that level and maybe a little lower, because at that point yesterday, if we went lower overnight, you could be down here by this, by this morning. Well, instead, then I come back to my computer and I see that Moody's, or whoever it was, I think it was Moody's, had announced, their cut and their outlook negative on Canadian banks, and of course, dollar CAD goes from 36.50, it rips. All right, so out with a 5 pip loss. My view really, though, hasn't changed, in that I think, we're still, dollar CAD still has downside in it from here. Primarily because this decline right here is impulsive. You look at an hourly chart, okay? So if we go to a short-term chart, let's go to a 60-minute. Same chart, different package. All right. Impulsive drop, 3 up, 3 down, 3 up. Looks like a big complex correction to me. So again, we'll see what the day brings, but this close here on the hourly high from this morning at 8 a.m. is 37.23. That's an area I would watch for resistance at this point now. So, could be getting short back into 37.23, which is an area we were out at 37.15 anyway. So you could be getting into that area and then headed lower for this test, which eventually is about 136 if you get in there at some point. Well, I guess 136 would intersect early next week, but you get the idea. 136 is still the big level in the daily chart. Okay, here's the 136, the former highs. And the fact that it intersects with the trend line is obviously makes it more important. Here's the, I guess, possible caveat. That 138.38 still looms. And now it's the underside of this channel line. Okay? And that's actually intersects tomorrow. So that 138.38, which we thought we were getting for so long and still haven't gotten, could actually be hit. If it was hit tomorrow, you'd have a lot more there as far as the intersections of trend lines and stuff, right? Because with all the long-term stuff, and there's a post last week that has a video. I think it's actually last Thursday's post that has a video that talked about two levels, 137.90 and 138.39. As it happened, we topped 37.90 and not 38.38, which I was hoping for. But if we, get in there tomorrow, then it's not just all the long-term stuff we've talked about, but it's also the short-term one, which has already provided resistance a couple times and could do so again. All right, so let the dust settle and be able to think a little more, clearly away from the screen later and take a look at it and write what I think in the post. But, it might be worth a couple shots on the short side, 36.20 to 37.23, okay? And then if you do get a final blowout, then pay attention to this again tomorrow. All right. As far as seasonals go, we actually are getting into a fairly interesting seasonal period for several currencies, and dollar CAD is one of them. So you can see that the seasonals on the long term, the 30-year chart, which has not tracked at all this year. Okay, seasonals have not worked well with dollar CAD this year. But again, once you start dismissing something and you're like it doesn't work anymore, then it starts to work again. So just a friendly reminder of that. But we do go back into a bearish seasonal period starting after next week. DXY, actually, which has been tracking its seasonals fairly well, the long term actually turns down for a week, okay? But this is 5-year, and the other ones down here are 10, 15, and 20. The 10, 15, and 20s actually turn down for a little bit longer, which would, kind of be in favor, or, with favor the idea of maybe the dollar respecting this resistance that we just hit today. Cable, for the most part, is bearish throughout May, right? Cable's one of the worst, or May is one of the worst months for cable, so I just want to remind of that part. But we do have, there's a window of upside for a couple of weeks, okay, on the seasonals. And that's true on all lookbacks except for 5-year, which is just kind of straight bearish into the end of May. All right. The commodity currencies are getting somewhat interesting here. So after next week, you do have most everything all the look back periods turn up for Aussie. Okay, and Aussie obviously still following that possible triangle deal. If that interpretation of the DXY where we're going to come off for a bit is, and again, Aussie's not in DXY, but if you're going to get a nice sharp drop down to that level, you could get a hell of a move higher in Aussie. You've seen nothing in the news, it's overblown, right, as far as the Chinese issues and what's been going on in the Aussie getting hit and everything else in iron ore. So if they start to tick up in the face of some dollar weakness, I think Aussie could be a good surprise on the upside. So with that, why don't we look at the Aussie dollar chart? All right. So 73.66 was the level that I thought would try to hold, right? Especially after we bottomed very close to it the other day. So we bottomed on, what was that, the 5th? So that would have been Friday, actually. You had a reversal day on a Friday, usually a good sign, and it was right at that fib 73.67. We're actually just above it now by a couple pips, but you do have the trend line down near 73, so I would be aware of that. 73 area near there, still some good pivots. Obviously no fib stuff really, but might have a 786. But you can see you have these lows, okay, back to June of last year. This is actually the Brexit low, is actually 73.06. That's the Brexit low right there. So that's actually interesting to note. Okay. And then, of course, this was a low from 11/21, November 21st. So maybe that's the big one to watch. And then if we go to the 4-hour chart, our intraday slope stuff, which has been playing out fairly well. Leon asking, not part of, but how does Aussie get back to 78? Yeah, I don't know. Again, you got to trade each chart on its own 2 legs, right? You remember we talked about this, like as an example, we were looking at, for the longest time, we were talking about copper and Aussie. And copper was holding up like really well, and then it dumped, and a lot of people said, man, if copper dumps down here, because I was like, it's going to 250.60. If copper dumps down here, then you're going to get, Aussie's basically going to fall off the face of the earth. Well, it didn't do that. And then when copper turned up like crazy, Aussie really didn't do anything either. And then when copper dumped again, Aussie was like went down, but not a lot, right? So I mean, I don't look. I don't. I don't want to try to rationalize the DXY pattern with Aussie. I just know that you have a good-looking Aussie, 73 spot is the trend line. Brexit low's there, November low is there, and now you also have the short-term slope line stuff is there. All right, so Aussie's still in a position where it's kind of, it's bearish, right? Yesterday's high is right on this median line. And if it bounces a little bit, you still have resistance at 74, okay? 74 is still resistance. And yeah, Leon says, I agree. It's like historical correlations are just all askew this year. Yeah, it's a weird year. I talked to friends at, banks and whatnot, and people like just don't know what's going on. Like it's a year of kind of breakdowns, and then everyone will talk about, like, I started to see articles now like where people are saying that crude oil and CAD are no longer related. I mean, okay, fine, people have said that before and it comes right back. Okay, the correlation. So I wouldn't start calling an end to 40-year historical relationships. But yeah, it's been definitely a weird time, that's for sure. And I think maybe that speaks to the fact that everything is just in this corrective period, right? Where it's very kind of difficult to navigate. I mean, at times we've gotten some levels right. But for the most part, it's been a very low volatility grind in a lot of things, right? I mean, if we were to look back, you were to tell me back in January, like in the first day of the year when the dollar was topping and the euro was bottoming and dollar yen was topping, right? And we were all like, yeah, okay, we think the dollar's topping here. And you're telling me in April that the dollar would be still, it head lower for the next couple of months. I would have think the dollar would have tanked and euro would be at 115. And really, euro's one bad day away from being unchanged, one couple bad days on the year from being unchanged on the year. I mean, Kiwi's unchanged on the year, right? Aussie's not that far changed on the year. Dollar CAD's, up a little bit for the year. Even dollar yen at this point has come back, is not that far changed from the year. So I mean, it's been a strange year. There's no doubt about that. All right, but let's get back to the chart. So 74 and change, 74 for Aussie, still resistance, right? But this is my big spot here that I really want to pay attention to. 73 is really what I want to look at for a potential low in Aussie. Okay. So I guess if you wanted to, you could try to sell one more 74, take it down to 73. At least that's what this chart would tell you. Where to watch for resistance. You've got on this, yeah, you can see right here, 5, 8 a.m. I guess that was NFPs. NFPs, right? Yeah. Isn't that last week? So NFPs last Friday, that level is still right here. Five. Yeah, so this is still a resistance spot. That's the NFP level, and it's 74.02. Okay. So this area is still resistance. If you get a push higher, it's kind of got to be like tonight, you would think. And then you might get one more spill lower into a low. So 74 and 73, good levels for Aussie near term, especially 73 could get a bigger low there. What about Kiwi? We'll go to Kiwi. So Kiwi, little bastard, this thing. So this, to me, very much a diagonal in play. 1, 2, 3. Is this 4? And then 1, 2, and then maybe finishing lower like this. I was looking for more, as noted in the video, then kind of remarked again after this all happened. I was looking more for like A, B, C, then a D, and then an E, where I guess you could still have kind of a descending triangle before you get a break lower. Not really my cup of tea here as far as a setup at this exact moment, right? I mean, if you just look at pull up the chart of, pull up a daily chart of this, I mean, you still have the support line is like at 70 or 60, about 68. Don't really like selling into that. And then the big spot to watch for that low is, again, the long-term median line and the 52-week low, and the 618 of this whole thing is all at 66.89 some point next week. So maybe we do get a little more weakness here in Kiwi, but it's not, to me, this is not really something I'm that concentrated on at this point. Okay. At this point, the Aussie levels actually look cleaner to me, believe it or not. So with that, let's take a look at the Aussie Kiwi trade, or Aussie Kiwi, not trade. So I was looking for a low here, didn't happen. Instead, it went to a new low. What do you know? I get this is like here's like another for this year. It seems like whatever setup looks beautiful and perfect, you should like not take it. But no, in all seriousness, you're obviously going to get a really big reversal day on Aussie Kiwi here. All right. Came into a good level. If you get a huge reversal day, okay, so be it. Still have Aussie at resistance 74. Maybe it comes in. One of 790 here. Still potential resistance in Aussie Kiwi. Weekly is probably a better way to look at it. Okay. Get a weekly reversal bar and then revisit it next week. I wonder how many people have like lost all their money trying to get long Aussie Kiwi only to get stopped out and then have it reverse again. So yeah, being really deliberate with a lot of things, but that's because of the conditions that we're in. All right, so do you want to take a look at a couple of, say, like a couple commodities? We already looked at copper. I think, the things I went over early in the webinar, I think are the best setups. Euro, and then even euro, pound yen, and dollar yen. Those are kind of the ones that I think are the best to look at right now. I guess you could add Aussie to that list because the levels are pretty clean. So gold came into, I guess, 2 days ago, looking for a gold low at around 1203. Turning up today, I'm wondering if we have put in some sort of a low. There's really no fib here, is there? No, even the 618's lower. I mean, even the 50%'s lower. And this lower line to me is much more important than, say, like this line, which just connects these 2 points. But it's a lot. It's actually it's the opposite, but situation of yen, right? In the sense that we know there's probably a big bounce coming in gold, just like there's a big drop coming in dollar yen. However, we haven't seen a major behavior change really worth playing on at this point. This would be something to watch. So you see the median line on this whole decline. So even within the downtrend, you had bounces on like where this provided support. Okay, right here on the 27th, it was resistance back on 5.8. So I would actually watch for support on the median line. Okay, so probably near about 1220 or so. If you got into tomorrow, obviously that would be further down here because it decreases each hour. But this might be something worth keeping up as far as gold's concerned. And then, your big behavior change happens when you trade out of this. Okay, when you trade out of the, you trade out of the bearish upper parallel fork. At that point, gold should be set for a solid bounce. So gold and yen. Yen being the one that I am most interested in. Yen, pound yen, euro dollar. Those are the 3 closest to trades from my point of view. Anything you guys want to look at besides what we looked at? Or questions? Going once. Oh, Leon says repeat closest trades. Yeah, so, okay, euro. We talked about the 60-minute chart. The 24-hour closing low is 108.51. So between there and 108.28, which would be a dream on a Friday low, that won't bounce, okay? And I'd be looking towards 109.78, maybe even 111, at this point 110.90, and that's based on, of course, the DXY resistance level and idea. Pound yen, this chart, I want to be short here. I want to be short pound yen. Again, the long-term resistance. But recall that we looked at ways to do it, and pound yen, we had this resistance, right, which is the former support. It's possible that you get a retest or something like that up here, okay? And that would be actually close to retesting the highs. And then, of course, dollar yen, same thing. If we get a bounce back towards 114.10, which is the former parallel here, then that would be a level at which you would want to see resistance, and then you'd be targeting lower, again, down towards, the former resistance line, which is 112.60 at this point. But that also decreases with time. And those are the 3 closest. Euro pound's also an interesting one. Might as well trade pound yen if you're going to express a pound cross a position. A little more juice there. And 2 questions. Pete says SPX. Steve says Euro CAD. All right, so let's start with S&P. So short-term chart, lo and behold, look where today's low is on this trend line. I mean, this is crazy. It's like the market never really changes. It just goes the same, hits the same trend lines over and over, which is great. But so here's the thing with S&P, okay? There's no secret. We're at some long-term resistance, okay? The longer-term Dow chart's actually cleaner from my point of view. That's fine. Everything from March 1st, corrective, okay? We know that. 3 down. This is probably, is a 3 up or is it done? Right? From here, it's lower. And I have a 618 of alternating legs because if it's a triangle, then you're going to drop down towards 2358. All right. So that's what my near-term focus for Pete is lower in the S&P towards at least 2358. Okay. That's how I'm looking at this. So, I guess the real question, and this is let me go to the Dow chart to really drive this point home. We have the really long-term resistance up here. We have a correction going on from March. The question is, what does it end up as? If it's a triangle, then it's going to go like this for a while longer and then go higher. And I actually would just rather see us blow out the top, to be quite honest with you. Don't think it's going to happen. You've got transports trading at 3-week lows, but without getting real big and grand, S&P 500, which you asked about specifically, I do think so. I think you break. So this is the channel. This is still the channel that's worth watching, even though you've traded outside of it. But notice what happened on the tops here. You see these tops? They're actually further apart, further away from the channel line than each preceding one, right? It's making its own little flatter channel line. So to me, that suggests that this, which held just now, is actually going to break. All right, so I would look lower towards 2358 because that is the 618 of this leg down. And if this is a triangle, if this is a larger triangle that's going on for March, like if it's a multi-month triangle, then that's your next logical stopping point is 2358. Again, we don't know if it's a triangle, but it's certainly a possibility. And so that would be the first level I would expect us to hit. So there's S&P. Pete, you are quite welcome, my friend, and thank you for the kind words. EuroCAD. Okay, so here's EuroCAD. Obviously broke through this resistance line. The long-term chart is very interesting. And when I say long-term, I say long-term. This is 1995 to 2008 trend line. Parallel for March 09, hits that high, hits that high. It's pretty darn close to hitting that high, isn't it? We're basically on it. Okay. So let's just call it pretty good resistance. All right, so that's fine. So we have resistance. We know that. Let's go to a daily, though. Let me see what how I have it drawn on this one. Okay, yeah. So I've got it drawn like that. Okay, so here's EuroCAD on the daily chart, and then I'll go down to an intraday chart. But on the daily chart, hit resistance, pull back. I still think the better support, at least for a more important test, is 47.30 to 47.50, and that's the median line. It's a couple daily lows from 426 and 427. Okay. So if I go on intraday, say 240 minute, first leg down, I'd watch for a failed high. And not just because, not because not at all because of this, not because of the fact that we have this pitchfork and we hit the upper parallel, and I think we go to the median line, but more because of this long-term chart that I showed you, where you have the major resistance. Okay, that is why I would look for more of a failed secondary high here. So what that means is that you're probably looking at, 618 retracement would be common, as we know. That would be up here on this high, which is 50.25. So specifically, I would watch for 50.25 resistance. Okay. So nice pop here. Could get a bounce back to 50.25. Would be looking for a lower high at that point based on the very long-term resistance that you've already hit, and then back to 47.50 or so. So those are some good levels to work with, I think, in in EuroCAD. And where did we open up the week actually? Let's see on EuroCAD. Don't have that on here right now. We actually opened up the week at 50.39. So, general area, right? 50.25, 50.39, general area for, to see good failure on the upside. So a little, bounce from here would not be, would be well within the realm of expectations before you get a failed top and a turn lower again into the 47.50s. Alrighty. All right, so wrapping it up, I want to get this archived and for everybody, and check it out if you were a little late or you want to review. Please check out the beginning part. That's at least what I think is the most important part, because really talked about the DXY and why I think it is what it is. Why I think why I'm labeling it the way I am, and also where the opportunity is with Euro, where to watch for the resistance on a bounce. What pound could be doing as far as a possible triangle, everything with all the three-wave movements, and then of course the pound yen short setup, right? Okay. All right. So everyone have a great rest of your day and weekend, and we'll have this up and the swing update up later. And thanks for attending. Okay, everyone. Take care. Jamie Saettele here, SB Trade Desk, signing off.